Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So majority of the companies that I own in this portfolio have reported earnings recently, and my plan is for the next couple of weeks I want to look at each individual company as much as I can and share it with the community and see if this is still, the reasons that we bought this stock is still intact, and we are, the company still making revenue, still going up, it's still, everything it basically seems absolutely fine, and we have absolutely nothing to worry about. Because like I've always said to you guys, I don't really worry too much about what happens in each quarter, but sometimes you want to see a trend. If the trend is upwards, so revenue is growing, net income is growing and EPS is growing and those free cash flow and so on, then of course you have nothing to worry about. And sometimes companies can even go down despite reporting excellent earnings report. Okay, so what I want to do today is I want to look at one single company. But before we do that, as always, I would genuinely appreciate if you can join us in the Patreon account, where you get access to a lot of things, like for example all the buys and sales that I make, all the dividend trackers. You got the watch lists, which I'm updating again. You got the ETF trackers, and then you got Sharia compliant investing ebook, and you have the family portfolio as well. So if you sign up for this tier, you actually get access to the family, as well as of course you get access to the Discord, where a lot of brothers and sisters are sharing good practices. So that will be really helpful. The company we're going to talk about today is Mastercard. Mastercard is of course a Sharia compliant company. They do not deal with anything to do with the riba side of things. They are basically, they are facilitated for the transactions that between banks and the customers, if you like, and the consumers. So that's all they do. And of course there's other things they do, but that's the main business, if you like. So what I want to do is just look at it first in terms of the financial side of things and what they've reported recently, and we'll take it from there, inshallah. As you can see here, for the 1 month, it hasn't actually done much. So although they have reported, it's actually just up about 2.5%, which is not bad. Okay, it's not bad at all. It's better than of course being down 20-30%, which some companies have. Basically some companies are down like 10-15% in just this month. So 2.5% is not actually bad at all. So let's have a look at what they've reported first. And this document you can actually find on their website. Okay, this is the document that they share every single year or every single quarter, if you like. And if we just focus on the 2020 Q2 of 2023 against Q2 of 2024, so we're comparing like for like, and then this is year-over-year growth. Basically that's basically what we're looking at there as well. So the net revenue, basically just the revenue side of things, as you can see, based on non-GAAP, it's actually gone up from $6.2 billion to $6.9 billion, which is quite nice to see. Now they've spent basically about 2.8. Year before they spent about 2.5. So okay, and then by the way, this was up about 11% and basically currency neutral, because remember this company has businesses in all sorts of countries in around the world, so they have to factor that, of course. So they do report, which is quite nice to see as well. You can also see here the net income here for after this. Basically you take away from these two, you can see about $3.3 billion of net income here, and before then it was basically last quarter was 2.7. so this is heading the right direction. We have absolutely nothing to worry about. Everything is in the plus sign of things. And as of course the EPS is also growing, heading the right direction, so 24% up from where it was this time last year. Now looking at the charts from Seek and Alpha, as you can see here, the key business drivers are the worldwide. So we're looking worldwide, purchase transactions and cross-border volume. And as you can see here, basically we're up about almost 5% quarter over quarter, and then year over year we're looking at about 6%. When it comes to this one, 7.7% year quarter over quarter, and then 11, almost 12% year over year, which is quite nice. And this one about 17%, and then basically 15%, which is absolutely nothing to worry about. Worldwide gross dollar volume is also heading the right direction. Yep, it's heading the right direction even for just this quarter. And same goes for purchase transactions and cross-border volumes. Slightly down from Q1 of this year, but absolutely nothing to worry about when it comes to cross-border volume. So overall, I think this is one of the best companies out there, and I don't think there's anything huge has changed. So what I'm going to do now is just look at it from financial side of things, see what basically how the company is doing. and then we will look at the valuations, inshallah. So we're going to use this one just to kind of go over. Like I said to you guys, this is probably one of the best companies out there in terms of, and in fact, let me actually show you. Let me show you what I'm talking about when I say one of the best companies. And this is probably one of the reasons I really like this company. When you look at the income statement, I've got a video coming up explaining what income statement, balance sheets, and cash flows are, inshallah, because there's been so many requests, so I will go over these things, inshallah. Now look at the total revenue. Okay, so from $9.4 billion to $26 billion, that's over 10-year period, right? Now look at the gross profit. Okay, look at the gross profit. Look at this. So a lot of the other companies, in fact, I'll show you some other companies, okay? Maybe I'll show you companies like Apple and so on, because this company, the total revenue and the gross profit is literally exactly the same. I had to double check this because it makes no sense for Mastercard to have no expenses. This is a bit weird. So total revenue, so I think there's something wrong with Seeking Alpha. Maybe they just added that on somewhere else, which is a bit weird. But we're going to use Yahoo Finance, and so you can see here, this is why you basically sometimes it's good to cross-reference your information all the time. So we got the total revenue here. So right now as it stands, we got $26.4 billion there. The cost of that is only $6 billion. Okay, so they are making gross profit of about over $20 billion, which is absolutely huge. Majority of the companies out there will be using, I don't know, maybe 20 billion of that $26 billion, and they will probably have about 60 here, and then after taxes and all sorts of things, okay, and overheads and so on, then they probably will have on the net income, they will only have, I don't know, maybe $1 billion left. But this company still has about over $12 billion of net income, which then helps this company to actually, of course, have excellent free cash flow margins. Okay, as you can see here, they've got over almost $11 billion of free cash flow right now, which is absolutely amazing. So I really like that. I like that about the business, and this is one of the companies that very similar to Visa. Of course, both of them are very similar. And at one point, I sold it, I bought it back. I'm glad I did, because I really like the business. I own it in both, in the family portfolio and in this portfolio as well. Anyway, let's have a look. Current stock price is $456. EPS over 13 dollars per share, and market cap of 421 billion, almost 422 billion dollars. Okay, it has wide economic moat. Beta is slightly higher. Current P is about 34, but the forward P is about 31, and the 5-year average for this company is over 40. So it's been trading around 39 to 40 for the last whatever years that I've basically track this company. But as you can see here, it seems slightly cheaper based on the way it has been over the last 5 years, and based on free cash flow right now it's about 28. Now in terms of dividend, okay, they don't pay a huge dividend, but they're actually dividend growers, so the payout ratio is very, very small. And as you can see, the latest increase was 16%, the 5-year growth rate was 17%, and the dividend streak of 12 years. So they've increased this for last 12 years. Now, dividend safety is 99%. Like we've already seen the over $10 billion of free cash flow. The free cash flow for a compound annual growth rate for the last 5 years is 12%, which is really, really good. Free cash flow yield, we're looking at over basically 2%, to almost 3%, which is what we're normally looking for. Free cash flow margin of 41%, which is really nice. Profit margin, return on equity, and return on invested capital, operating margins and return on invested capital, as well as return on equity. This company is absolutely doing an amazing job. So that means the company is very profitable. The management are doing good job and reinvesting the money that they actually get in, the capital that are available to them to generate more profit for us, which is really nice. And it has returned almost to 20% of basically in the last 10 years. Now the revenue growth basically in the last 5 years it grew about 11%, which is not bad at all. In fact, the EPS about 12%, and current ratio is above 1. Now, what this means is the current assets for this company that this company has is basically higher than the current liability. So anything happens for the short term, this company should be able to pay this off quickly. Okay. Now there is another one which is called quick ratio, slightly different. I'm going to talk about that. But both of them help you understand basically if the company is able to meet its needs for the next or liabilities in the next 12 months. I'll talk about quick ratio another time. So growth estimate for the next year, we're looking about 16%. Growth estimate for the next 5 years. So every single year, we're expecting the earnings to grow about 19%, which is really huge. Okay, right now is basically expecting. In fact, let's just go on Seeking Alpha and check the earnings expectation is moving forward for this company. So 16%, 15%. 16% for the next 3 years. So average that's basically what they're getting. And then 11%, 12%, and 12% when it comes to revenue side of it. So from $28 billion to $35 billion revenue, which is really, really good. Now, when it comes to valuation side of things, as you can see, it's fairly valued according to Morningstar. $451 per share. Right now it's $456, so not far off. Simply Wall Street is actually saying it's slightly undervalued, $487. Okay, so about 6% undervalued according to Timperank. Next 12 months, okay, they're using 12 months, remember target, and that's 530. They're very bullish on this company, 16% upside from where we are right now. Strong buy. When it comes to Seeking Alpha, more or less the same, but it is just a buy. So basically looking at all of this, if you would like some sort of a margin of safety, I will say if it hits maybe 440ish and we see a dip in the market, that will be probably be good entry. I will show you. I'm slightly down on the stock in this portfolio, but I'll show you exactly how many shares I own and so on. And as you can see from Sharia compliance side of things, this is one of the reasons I love this company. You don't have to worry about interest-bearing debt, interest-bearing securities. The business model right now as we speak is absolutely fine, but it's one of those companies that could potentially change it in the long run. You never know, okay? But right now it's absolutely fine, no issues, and they are buying back their own shares, which is absolutely huge. Just one more thing I want to share with you guys. When it comes to the total return the last 5 years, we're looking about over 12%. The revenue we've already seen. So if you focus on this part here, you can see the revenue growth, the compound annual growth rate about almost 11%. Net income grew about basically 13% almost. EPS about 12%. Price to free cash flow, free cash flow, we're looking at about 12%. Dividend yield of almost to 15%. So everywhere you look at, this company is absolutely solid business. Final thing I want to talk about is compare it with Visa and the S&P 500. And what we want to focus on is the performance, but we're looking at the total return of this business, okay? So you can see just for the last 12 is basically year to date, basically it's about 7% up. The S&P 500 is about 12%. Visa, in fact, is flat. So it's done better than Visa. Visa is up about 9%, 10% for the 1 year. S&P 500 about 20%. The Mastercard is about 17%. So Visa is still lagging the overall, basically being beaten by both, in fact. Okay, 25% up for the last 3 years. The S&P 500 about 20%, and total return for this company for Visa is about 11%. Now when we look at the last 5 years, and this is why this compound is very interesting, okay, 70%, 50%, 83%, but the last 10 years 545%. So if you own this company for the last 10 years and you sit in your portfolio right now, you basically, this is what you would have: total return of 554%. The S&P 500 is only 173%, and okay, 430% for Visa. So this is why whenever I say, beating the market, you don't necessarily need to beat the market every single year. In the long run, in the next 5 to 10 years, if your stocks are doing this type of returns, you will definitely be the S&P 500. That's why it's important to buy high quality businesses that are doing really well, that Sharia compliant, of course, and just hold them for the long run. For the 5 years, for the 10 years, you will not be complaining if it's, of course, a solid business. But you need to know what makes a good business. And inshallah, hopefully in the next few weeks, I'm going to try to help you guys understand that, especially if you are new to the stock market. Now, final thing I want to show you is Mastercard holdings that I have right now. I've got 10 shares in this portfolio, and as you can see, my average is $466 per share, or 360, let's call it 370 pounds. So I'm down about 3%, and a lot of that is in fact it's not even basically I'm down about 2% when it comes to just gain and loss, about 1% when it comes to FX impact. So overall about 3%. You've seen the stock market, it can go up 3% each day, that way or that way. Either way, I'm really I'm happy with this company. I'm going to buy more of it, inshallah. And then basically this week I will be adding to it, and I've already added to it in the family portfolio. If you are part of the Patreon account, you've already seen that. If you are not, please join us. That will be really helpful to the channel, inshallah, and hopefully you'll gain something out of it, inshallah. Have a wonderful day. Assalamu alaikum.